All right, back to work. Weekend is over. Monday is behind us. Hope you guys made some money out there today. Hope you all had a fantastic Mother's Day weekend. Happy Mother's Day to all the moms who are watching. It's back to work, though. We have a big week ahead of us and a really big video here tonight. We got a lot to talk about, a lot of great trades I'm tracking for tomorrow. We got some ranges, we got some trends, we got some breakouts. We got some Fed speakers this week. We got the debt ceiling debate going on. A lot of big news this week. We're going to cover a lot tonight. Most importantly, though, ranges, trends, breakouts. I have a bunch of trades I'm tracking for tomorrow, and I'm going to give you guys a roadmap. I'll talk about my favorite trades tonight, that we have a game plan to make some money tomorrow. Before we jump in and get the party going tonight, as always, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you enjoy this stuff, do me a favor, hit that like button. Give me a shout out down in the comments section. Thank you so much for tuning in to Monday evening, supporting this YouTube channel. But enough of the intro, right? Let's get into it here today. The best trades for tomorrow, they're not going to trade themselves. Where are the best trades setting up for what might be a very busy Tuesday tomorrow across our favorite markets? Well, we got three scenarios, right? Three scenarios. Range on the S&P. Got a lazy bull trend right now. Lazy bull trend in the Nasdaq. And kind of a breakout pullback scenario right now on the crude oil. I'll tell you, all three of these scenarios, range, a lazy bull trend, breakout, pullback, all three of these are very different, as you can tell. But you know what, though? Looking at the charts right now, and we're going to go into a lot more detail here in the video tonight, all three of these scenarios, they're really using the same, what I call cycle. There's almost like this hidden cycle, this hidden series of patterns. Actually, it's two specific patterns that I'll tell you, by the end of the video tonight, learn to use these two patterns as part of this cycle, and you'll have a lot easier job making money tomorrow and the rest of the week here. So we're going to cover that in great detail because all three of these markets, they're a little bit different, but I'll tell you, they all give you the same basic game plan. Learn the game plan, and you'll be ready for tomorrow and probably the rest of the week here as well. Now, before we jump in and go into those two patterns and this kind of hidden cycle that you'll find in the charts here for tomorrow, let's all get on the same page for tomorrow. Tomorrow is, well, it's not your average Tuesday. We got two big events you want to be aware of. First of all, we've got the retail sales, right? Retail sales are definitely going to be a big number tomorrow. And definitely in my trade, we're watching this tomorrow morning at 8:30 Eastern time. You know, inflation has really slowed things down. The hiking interest rates slowing the economy down, right, pretty well. We're going to find out just how far it's slowing down tomorrow morning at 8:30 Eastern time. That's definitely something I'll be watching tomorrow morning with all you guys in the trade room at 8 o'clock Eastern time. Also, too, we are supposed to have a debt ceiling meeting tomorrow at some point. Congressional leaders are going to meet with the White House. It doesn't sound like they are anywhere near any deal right now, but we definitely be listening in. And it really feels like right now, let's face it, it feels like right now the markets are all kind of holding their breath a little bit, right, as far as waiting for some updates out of that debt ceiling meeting at some point tomorrow. Now, we don't know when it will be tomorrow, but we know we're supposed to get some updates from that tomorrow, and that definitely will be a potential catalyst. Be tracking tomorrow morning in our trade room. We also have a bunch of Fed speakers right now, and there's more peppering some of the other econ calendars. Fed speakers are going to be on our radar tomorrow as well because we heard from the Fed a week and a half ago, and they kind of insinuated, they hinted the fact they'd be pausing rate hikes going forward until we get some more, data. So we'll be definitely listening to see if we hear from any Fed speakers, if they give us any more hints of a Fed pause, or maybe even, oh my goodness, maybe even a rate cut at the end of the year this year. There's a rumor flying around, a rate cut end of the year. So we got a lot we're on tracking for tomorrow, right? The debt ceiling meeting, that's to be determined what time it will be. The Fed speakers tomorrow morning and retail sales, 8:30. Lots of catalysts. Love it. We get a bunch of speakers, lots of catalysts, because that'll get these markets moving here for us tomorrow. Now, speaking of moving, right? Let's go over all my favorite trades here now on each one of these charts. If you like making money, I would definitely watch all the way to the end because I'm going to wrap this all together. Trades I talk about on the S&P can be applied to the Nasdaq. The Nasdaq can be applied to the crude oil and vice versa. So I will give you a reason to stick around all the way to the end of this video. Let's jump in. S&P, Nasdaq, and then crude oil here tonight. Keep in mind, these are all tick charts. You can find the time frames in the upper left-hand corner. They are all tick charts. This is the 21 EMA. It's not the only indicator that I use, but it's the one you'll want to use the most in my trade and the strategy. And down in the description, I'm going to put some higher time frame charts, some 60-minute charts, some 4-hour time frame charts. These are really important right now because the 60-minute chart on the S&P really illustrates the crazy range we're in right now on the Emini and the SPY. On the Nasdaq, confirms with a lot of blue skies overhead. So I would definitely check out those 4-hour, those 60-minute time frames linked up in the description if you want to get more of a bigger picture view of a lot of how they help me find the best trades each day, right? So grab those links in the description. Now, with that said, what's the most important factor that we're dealing with right now on the S&P? The S&P is basically a big range, right? We're obviously a little bullish, right? We're a little bullish right now, a little more bullish than bearish right now. But again, check out the 60-minute chart in the description. Look wider, and we are just one big, right, monster trading range right now. So whenever we have a trading range, our goal is to use that range as a magnet, okay? Find levels of resistance, overhead, and basically trade against breakouts, right? Sell high above resistance, buy low below support, and try to use those, again, use the range as a magnet. We talk a lot about ranges in our free trading course, right? Love me some range-bound markets. Now, this is a bit different, quite a bit different from the Nasdaq and the crude oil, but you'll notice these patterns are going to be very applicable, and we'll kind of build on them as we go deeper into this video. What you want to think about here is as we go higher, we're trying to sell it back down. As we're going lower, we're trying to buy it back up, right? And we're basically buying low, selling high, okay? That's the general idea of this. Now, how do we actually put this into action, right? Into action. Now, in my free trading course, I talk about two types of setups, right? One's called a failure and one's called a trap. Okay, failures and traps are really kind of our bread and butter, right? In our trade room, in our strategy. So, for example, as we go higher here, right, we're running into resistance until we can see a very convincing break of this wall of resistance right now. The goal is as we go higher, is to ultimately trap breakout traders, trap traders on the wrong side of this. And this is where you're going to use one of my failure patterns. Now, we're a little bullish right now, right? So we're going to use what I call a 2-try variation of that failure. Let the buyers try once. Let them try twice. And then think about now, if you're a buyer and you're buying right into overhead resistance, big range on the 60-minute chart right now, think about how we can turn this thing over and run it back down again. We're going to use stops. Right? We're going to use stops. Okay, we call these failure patterns in our trade room. You guys are learning this in the free trading course, right? So we're going to use our stops as fuel, right? To fuel this move back down into that trading range. Okay, that's one of the two patterns that are part of this cycle, as I mentioned earlier. Now, as we go lower, what's the problem now? The problem is we're now going back into that trading range. We've got rising support coming in, support levels below. So as we're trying to rotate down again, okay, now the challenge is I don't want to sell very low, right? I want to sell high with a failure pattern. The next pattern now is a trap. Okay, these are 9 times out of 10 the easiest ones to trade off the high. You know, sometimes you might not get a real good failure. You know, sometimes you may not get it. Sometimes it just rips up and rips back down again, right? That may happen sometimes, right? So if it does rip up and rip back down again, the trap pattern is the one you want to look for. All right, guys. Now, again, we learn a lot about these in the free trading course, right? So just you guys are learning in that video series. So we pop up, trap the buyers in, use their stops as fuel to turn it over, all right? Rather than simply trying to pick the top on this. Okay, then as we go lower, remember, this is the kicker now. As we go lower, we're looking for trap entries, right? Actual literal trap patterns, right? Above prior swings, okay? The same thing is true down bottom. right? As we go lower, we end up back around these lows now. Let's trap some rookies in. Let's trap some sellers down here, right? Get the bears coming in, right? Horrible place to sell, right? Bad place to sell. Into support, right? Again, big wall of support down here, right? So as we roll lower here now, don't chase it, right? This is where we're taking profit, right? So we're selling off the high, running back down, taking profit down at the lows. Now, let some other poor rookie trader who's not watching my videos, let them come in and short into this area. You know what to do now, right? Think about where is their pain. One of my first mentors always said, think about where their exits are. Think about where their pain is. Think about where they're waving the white flag, right? And we can use those stops here now, right, to fuel this thing running higher. Again, classic failure. And then as we're going higher, right, as we're going higher now, okay, what do? Okay, we want to buy high now. As we're going higher, we're looking for traps again, right? Traps again, right? The actual literal trap pattern you guys are learning in the free trading course, all right? So again, we're trading the edges. Okay, the key here is be careful in the middle. Okay, be careful. As we go up, buyers once, twice, trapping them in, shorten the stops, right? As we go lower, we're looking for trap patterns as we go lower, vice versa. Okay? And again, these are just you guys are learning that free trading course, which reminds me, I know that most of you guys have taken that free class, right? You've learned things like failures, traps, pullback combinations. I call it the price action cycle. All right, I know you guys are loving that stuff. I get so many great emails every week from people in the free course right now. But if you're one of the few folks watching who haven't taken that free video series yet, I'll put a link up there for you in the upper right-hand corner. Grab that link, take that free trading course, because the strategy I'll teach you in that free video series will show you a simple trick to know exactly where the best winning trades will be each day, and I'll make it super easy to start making money on your own account by teaching my 4 favorite entry patterns to help kickstart you making money out there. If you're like me and you hate missing the best trades each day, or maybe you're taking too many losses right now, grab that link, take that free course. It is perfect for someone trying to make the jump into full-time trading, and you will learn quickly why I always say ranges are my favorite types of markets to trade, right? So keep your eyes on those failures and those traps. Now, we're a little more bullish, right? A little more bullish here right now. How would I buy it? How would I buy this thing if it kept going higher? You know, I mean, there's always possibility. It may break out going higher. What's the best way to buy this, right? If we were to begin to keep going higher here, that's a really good question. Why don't we talk about that now on the Nasdaq? All right, the Nasdaq, of course, is a lot more bullish, a lot bullisher, I guess you would say, than the S&P 500. So on the Nasdaq, excuse me, and this is where I definitely would encourage you go down the description, right? Grab that 4-hour chart, grab that 60-minute, and you'll see right away the Nasdaq is a lot more bullish, right? We get this nice bullish move here on the Nasdaq. The only thing the Nasdaq has to worry about right now is this overhead high, right? Above that, we've got blue skies. I mean, we really do until we get about 14,000. Nasdaq is a lot of blue skies there overhead. I got some levels I'm watching, some projections there, right, for tomorrow, and we'll talk about that tomorrow morning in our trade room. But Nasdaq right now, quite bullish, right? Has to break to that high here. That's a big problem. Now, that would normally seem pretty easy, right? I wouldn't normally think a market that rotates off the low like this would have any problem, breaking to that high here. But this is not the same market we had 6 months ago, right? We've been chopping around in ranges for the past few months. Let's take a quick trip, right? A bit wider here. And this is why I said earlier the Nasdaq is kind of in a lazy trend, right? Off the highs, right? Off the lows. Look at what's happening with the Nasdaq. Every time we make a new high, what happens? It gets kicked back. Make a new high, right? Gets kicked back. Every time it gets kicked back, it gets bought right back up again, right? So as we're going higher here right now, it's going to be difficult for us to justify buying until we see a rather significant punch going higher. Now on the S&P, I talked about, what if we were to see this thing really punch, right, and go higher here? What's the best way to trade a breakout, right? What's the best way to trade a breakout? There are really 2 basic ways you trade a breakout. My kind of favorite trade right now on the Nasdaq is using that same sequence I just talked about on the S&P, so we'll talk about that here in a moment. But finishing up what I was talking about there, okay, on the S&P, if we were to see a strong punch through these highs, okay, and again, it doesn't seem as likely right now because what I said there a moment ago, but if we're to see a strong punch through the highs, how do you trade something like this? You basically trade a bear trap on the way higher. Okay, we know we don't want to buy high, right? And trap patterns are the easiest way to avoid buying high, right? We talked about selling off the high and how trap patterns are very effective to avoid selling too high, right? So traps as we go lower, right? This would be a kind of a bear trap example as we go higher, right? So if we do start punching and running higher, and this would also include the S&P as well, the Nasdaq looks a little bit more ripe for that right now because the open skies, the blue skies we have overhead here. But if you were to see it rip higher, strong move, shallow pullback, higher high in price, and that would be your trap, right? Now, if they could keep this thing going, then we can start thinking about using these prior areas of resistance, start using them as support. Ultimately, we don't want to buy high, right? And so traps are a great way to get that initial breakout going, right? Get you in as low as you can. But then you want to start thinking about, okay, now let's start finding larger channels off the high, right? Larger channels off the low. Let's get that nice deep pullback and let's buy that pullback, right? Now, the way that I like to buy pullbacks in the bigger picture is I like to get underneath the moving average, right? Trap the bears in, let those bears try a couple times, right? Use their stops as fuel. Now, this will be a bit different on this one, right? In this scenario, they've really given us a lot of bullishness going through this high. We'll talk about how to short this high in a moment. Don't you worry. I'm not going to leave you hanging on that. But if we do end up breaking to the highs here right now, we get underneath that moving average. Just let those bears try a couple times. They could easily be successful going back into that, right? Going back into this range area below us, right? So you want to give them the benefit of the doubt on that because, again, it's a relatively lazy trend right now. It's not a very strong bull trend. But if I can get those bears trapped in, I can then look for what's called a failure into pullback combination. Okay, these combination setups are pretty common, right? We get below the moving average, the bears get trapped, they fail, we pop above, and we pull back, right? That failure pullback combo, you guys are learning about this, right, in the free trading course, right? So failure pattern below the moving average, pop back up, and then where's the objective? The objective is to go back and retest the big high, right? That's the objective, right? That's where your targets go, back to retest the high, and we'll figure out some bigger targets tomorrow once we get there, all right? So if we do end up popping, right, going higher here, that's that bear trap, right? See how it sets up to? Strong move, shallow pullback, higher high. You have to have that higher high in order for us to get that swing low, because swing lows are where traps live. Okay, and we go over all the rules, right, in the free course. All right, good. So you got that covered there. Okay, now let's put that channel back on again. Okay, put that channel back on here again, right? That channel is depth my radar here. Now, if we know we have areas of resistance and we know that every time we go up, we're getting whacked back down again, what do you think is the best way to sell this? It's the same basic idea. It's that same sequence. Now, this one's obviously a little more bullish than bearish, right? The S&P is not as bullish as the Nasdaq, so it's even more important. It's even more important, really, on this one that we're going to let this thing take out these highs, get up into these areas of resistance here, okay? Trap these buyers in. Hopefully, there are some buyers who don't know how to read a chart yet, who are not looking left. Okay, they're not going to see that big high up. They're going to see the failures we've seen off the highs here, and hopefully we can get some of these buyers to come in, right? Try to buy it a couple times. We can sell into those stops, right? Get them to come up here. One try for the buyer. Remember, you want two tries because we're bullish, right? In the short term. So we need to really rope those buyers in so we can use their stops, right, as fuel for the reversal. And when you do this, you want to see buyers try once, go lower, and try twice. Okay, once, go lower. The lower low is the key because buyers want to buy low, right? Buyers don't buy high, right? They want to buy low. So they buy once, they go lower, they reload the boat again, right? Buy it again. Okay, now their stops are just sit and duck, right? Because again, we might be in an area of resistance, right? It's a good area of resistance, but momentum is very strong in this situation. So it's very difficult to pick tops sometimes, right? Sometimes you'll pick a top and it'll keep on going. right? So rather than trying to pick that top here, I would rather let the buyers come out and just show me what they want to do. They want to keep it going. Okay, good. We can trade that breakout. We know how to trade that breakout. But if they fail at these highs, if they try a couple times and fail, okay, now we know, right? Now we get the stops, and now we get a much higher percentage trade going lower. Now, in this situation, this is exactly where a trap is necessary. It's a must-have, right? As we go lower here, mainly because you've got trend lines, right, coming up from below there, right? So again, think about this: trap the buyers in. I say trap them in. Really get those buyers committed above the moving average, right? Let them try a couple times there, sell right into those stop losses. That's the fuel we need to turn this thing over. And then again, right, get that trap setup coming in off the high because you want to sell as high as you can. All right, and then who knows, right? We may end up running all the way back down, trapping out below some prior swings, and you guessed it. Remember, we're an overall bull market, right? So trying to sell down here, you would think that with targets would be sitting down around these lows down here. Once we get down around some support levels, now it's pretty easy, right? The sellers, the bears who sold off the high, they're getting fat and paid right at these swings low down here. Once they start taking their profit, in come the rookies. I was one of these rookies many years ago. That's the reason why I know these traps exist. I learned this stuff by literally doing the opposite of what my instincts were doing as a new trader, right? When I was a new trader, my instincts were chase it going lower, chase it going higher. We don't make much money long-term selling high and buying low, right? So hopefully there are still some rookies out there trading tomorrow. We'll trap them in. And again, same thing, right? Trap them in, use their stops as fuel, and then try to run this thing back higher. Now, oftentimes, when you get these really deep pullbacks, where's the market want to go? It's going to want to go back and take out that high again, right? Oftentimes on these, you can do is go find a new channel, right? So draw a channel off these highs like this, bring it down off that low, and then go out and look left. And what do we always say? Right? First test. Yeah, first test. Now, I love traps, right? Traps are my favorite. I think I've said that word probably 100 times today so far in this video. But that trap, right? Whatever pattern we get, it could be a trap, it could be a failure, it could be a pullback combo, it could be a strength trade, right? If you guys are that far enough along in the free trading course, right? So any of the entry patterns coming off the low of that channel, right? But again, it all begins with, right? It all begins with getting down to support, waiting for the bears here, the sellers here right now to commit, and then buying right into stops as they go. All right, guys. So again, very different scenario on the Nasdaq, but the same kind of basic game plan, right? And again, we're open-minded to the breakout. Right, we are. But remember, we don't just buy the breakout here. We wait for it to pop, shallow pullback, higher high. That will give us, right, that trap we need. Now, keep in mind, right, if it pops up and we don't get that, right, we start pulling back 1, 2, right? That's not a higher high. Remember, it needs to be pop up, shallow pullback. The higher high is incredibly important. Without the higher high, now we start looking for that drop back down again. All right, and we'll go over more of this tomorrow morning in our trade room, 8 o'clock Eastern time. Don't miss it with a front row seat for that retail sales number coming out at 8:30 Eastern time. All right, we're looking pretty good there on the Nasdaq. How about some crude oil? Crude oil is another different scenario right now on the oil. What's the most important factor right now on the crude oil? First, there are two factors right now. Two factors. One is that range from last week. Okay, ranges are going to act like magnets until we see a convincing breakout, okay? And then once we see a convincing breakout, that trading range, as we always say, kind of the underbelly, if you will, right? The areas of support below that trading range, they now become areas of resistance, right? That's why I call it the breakout pullback zone right there. Make sense? Okay, so that's the first component. The first component here is the range, okay? Again, they're magnets, right? They're magnets until they're not, right? They're magnets until we see that what we call a 1, 2, 3 breakout. Once we see a convincing breakout going out of that trading range, now those range levels start acting as resistance. And you have to think that right now, between this high at 71, 78, really this whole area really, right? That whole area right there, it's all the pullback zone, right? It's all the breakout pullback zone. Sometimes they'll go right back to this low right there. That's all we get. Sometimes they'll go all the way back to the actual trading range. Okay, so just be aware of this range up here. This could be a little confusing tomorrow if they wind up, punching a bit higher. Got to be careful not to buy too high here if it jumps up. Okay, that's one that really is one of the most important factors here. That breakout of that trading range. Okay, the next important factor is how the market broke out. Now, in my trade room, we call these pop and grinds, where they pop out and they kind of grind down. All right. It is not just my favorite dance move, as we joke around in these videos, right? The pop and grind are great, all kidding aside, because they give us a channel. They allow us to connect these lows and bring it up around the highs. And so we're looking at this right now, and if you're a student of mine, right, you know how much I love traps, right, above prior swings around the high of that channel. So this pop and grind channel just really fits like a glove in combination with the range breakout pullback. Okay. Now, how on earth are we going to trade this? Right? Can you guess? Take a wild guess based on my sly remark there. I'm sure you probably figure it out. Right? We have a pretty significant pullback. Right? If you go to the faster time frame, like in our trade room, we'll trade off of like a 512 tick or a 618 tick, right, on the oil. Right, on the faster time frames, we're not trading a 3,000 tick chart in our trade room. This will feel very bullish, right? That's a pretty bullish move off that low, right? So in the short term, it's pretty bullish. So as we go higher here, and remember, keep in mind, it could be here, could be here, could be here, but the same basic principles apply, right? We're pulling back, we're running into overhead resistance. I'm not trying to just simply pick the top of this. I would much rather wait for these buyers to come in, show me they are trying to run this higher, and then I can use their exits, right? Use their pain, as we say, right? Use their stops as fuel, right? Because we're going to need that fuel. Remember, it's relatively bullish there in the short term. So rather than trying to pick the top on this, let the buyers try a couple times, use their stops as fuel. We'll wait for that nice signal. We can look for that short back down again. Okay. Once we go lower, where does the market want to go? Yes, it's going to want to take out that low. Absolutely. Easy, right? As we go lower, what's my concern? Selling low, right? Selling low. I don't want to sell low. What's the entry setup that allows us to avoid selling low? It's a trap setup. Now, if we're lucky on this, it'll pull back right around that same area, right? Right around, and again, if you're taking the free trading course right now, we call these failure into pullback combos. Usually where the failure pattern triggers, they'll come right back in and around that area, right? They'll hit it again, okay? So that would be great, okay? That'd be great. Again, trap, my favorite traps, right? But we can use a pullback setup there as well. It'll all work as we're going back down to retest that low, right? Now, once we take out that low, so we go up, buyers try a couple times, we sink back down, bam, right? Take out those lows now. How do you buy off the low? How do you buy it? Same principle, right? Same basic principle over and over again. Rinse and repeat. That's why I said, this cycle, right? It's going to probably keep on playing out. It's been very good to us the last few weeks, and so it'll probably be pretty good to us the next few weeks, at least until we get that debt ceiling meeting. At least until we get some deal going on Capitol Hill. And it doesn't sound like the White House and House Leader McCarthy are anywhere close to getting that deal done right now. So until that happens, we're going to keep on trapping in, right? They take out that low. We don't want to sell low, right? Horrible spot to sell low. So what do? You let the rookie sellers come in, let them try a couple times, right? You buy into those stops, and then very, very important as we go higher, this is exactly where traps must be taken here, because as we go higher, right, more channels coming in off the highs, and we'll be looking for profit targets up top, right, to short, back down, do it again. Right? Rinse and repeat. Wax on, wax off, as we say in our trade room. Right? Rinse and repeat. Keep on using stops as fuel. Keep grabbing those traps as we rotate back and forth here. And like I mentioned earlier, learn to recognize this kind of hidden cycle right now, and you'll probably find it a lot easier to make money here for tomorrow. How would you trade this if it ripped higher? Right? How would you trade this if it ripped higher? If it really ripped higher, something happens in the Middle East, something happens in Ukraine, right? Something happens and oil freaks out. What would you do, right? As we go higher, what would you do? Traps, right? This is exactly what we talked about earlier, right? If it rips higher, like on the Nasdaq, right? Rips higher, what do? You grab those trap patterns. That's the easiest, it's the safest way to do it when you have a reversal, right? If the market was to be bearish and then for whatever reason something happens overnight, something we don't anticipate, it happens all the time. If it was to rip and run higher, you want to buy as low as you can, right? Buy as low as you can. Find that trap set up and get in under those lows. Targets are pretty easy, are up around that 73.89, 74-ish area above the high of that trading range, right? So for some reason, the buyers grow some confidence here, right, and run this thing higher. Again, they'll be careful, right? It could easily jump up and come 1, 2, right back down again, all right? But if it jumps up, it holds that pullback and goes higher here. Okay, now we know, right? Now we know there's entries here below that low, right, for that trap entry going higher. All right, guys? Only time will tell. But at least now we have a good game plan, right? That's half the battle, right? It doesn't make any sense to predict this stuff. What makes more sense is to visualize, to game plan, to run some scenarios. That way, no matter what these crazy markets do, you get a game plan to make some money on Tuesday. Now, speaking of Tuesday, don't forget, guys, we get together and we trade this stuff together every morning in our trade room, 8 o'clock Eastern time. The easiest way to make sure you're doing this the right way and getting the consistent results, the confident results that you want is to come out and do it with me tomorrow morning in the trade room. You're going to love it. Get a great video course, get a great professional trade room. A lot of our students are making money consistently right now, so you're going to love it. I'll put all the membership links. I'll put all the free course links. I'll put all the higher time frame links down, the description of the video here tonight, so definitely don't be afraid to grab those links. If you need any help to get into the free classes or any help with anything we talked about here tonight, don't be a stranger. Feel free to call the office, use live chat, use Skype. We're always here to help out if you guys have any questions or need help along the way. All right, guys? Hope you had a great day out there today. Get some rest tonight. We'll see you guys tomorrow morning, 8 o'clock Eastern time in the trade room. If not, we're going to come back tomorrow night, and we'll do it again tomorrow night. Get ready for a big Wacky Wednesday session on Wednesday. All right, guys? As always, thanks for being here. Thanks for watching all the way to the end. My name is Joseph. Be well. Be nice to each other out there, and you better be here next time. Adios, amigos. Bye-bye for now.